breaking. President Trump's new tax plan could save drivers $10 billion annually. What it means for you. Imagine saving money every time you drive. President Trump has just unveiled a tax plan that could put billions of dollars back into Americans' pockets. This is not just another tax cut. This plan could reshape the car industry, impact your personal finances, and even influence upcoming elections. But is this a game changer or just another political move? And most importantly, how much money could you actually save? Stay tuned to find out everything you need to know. In a recent address to Congress, President Trump proposed a tax plan aimed at boosting American manufacturing and providing financial relief to drivers. The biggest change is a new tax deduction for car loan interest. But this tax deduction only applies if the car is made in America. Right now, most Americans cannot deduct interest from auto loans on their taxes. This means that if you finance a vehicle, the interest you pay is simply an extra cost. Under the new plan, however, if you buy an American-made vehicle, you could deduct the interest from your taxable income. This could potentially save you thousands of dollars over the life of your loan. For example, let's say you finance a $40,000 car with a 5% interest rate over 5 years. You would pay about $5,300 in interest. If this tax plan passes, you could deduct this amount from your taxable income. This could reduce the amount you owe to the Internal Revenue Service, but this tax break only applies to vehicles manufactured in the United States. This creates a direct incentive to buy American-made cars. The government estimates that this initiative could save drivers up to $10 billion every year. That means millions of Americans could pay less in taxes simply by purchasing vehicles built in the United States. Currently, the average interest rate on auto loans is around 6 to 7%. For many borrowers, especially those with lower credit scores, interest rates are even higher. If this tax deduction applies broadly, it could reduce the total cost of owning a car. This could also encourage more consumers to buy newer, fuel-efficient models instead of used cars. For an average borrower, this could mean an extra $500 to $1,500 per year in savings. The total savings would depend on the cost of the car and the interest rate of the loan. One of the major goals of this tax incentive is to increase demand for United States-made vehicles. This could bring back jobs to Detroit, Ohio, and other auto manufacturing hubs. The United States auto industry has struggled in recent decades due to global competition from countries like Japan, Germany, and South Korea. Many foreign automakers, such as Toyota, Honda, and BMW, already have United States-based factories. But not all of their vehicles qualify as made in America under federal rules. If this tax plan is implemented, it could pressure foreign car companies to increase United States manufacturing. This would allow their models to be eligible for tax deductions. This could lead to billions of dollars in new investments in American factories. It could also create thousands of new jobs. However, some critics argue that this could have unintended consequences. This could include higher vehicle prices due to production shift. While this tax break is designed to benefit consumers, the timing is also strategic. With elections approaching, this policy could help President Trump gain support in key swing states. These states rely heavily on auto manufacturing. These include Michigan, Pennsylvania, and Wisconsin. It also raises questions about international trade relations. If foreign automakers believe this tax break unfairly benefits American companies, we could see trade disputes or tariffs. This could lead to increased vehicle prices. Additionally, while this tax incentive reduces individual tax burdens, it could cost the government billions of dollars in tax revenue over time. Lawmakers will have to decide whether the benefits outweigh the financial impact on the federal budget for consumers. This could be a major financial decision factor when buying a new car. If you are in the market for a vehicle, should you wait for this bill to pass before purchasing? Here are a few key considerations. If your car is foreign made, you will not qualify. This could push some buyers towards domestic brands like Ford, Chevrolet, and Tesla. Interest rates are still high. If you're planning to finance a vehicle, This tax deduction could help offset some costs. However, it will not reduce your interest rate itself. Auto manufacturers may raise prices. If demand for American-made cars rises too quickly, dealerships may increase prices. This could make tax savings less impactful. Experts recommend that if this bill moves forward, potential car buyers should carefully compare total ownership costs before making a purchase. The automotive industry is divided on this proposal. United States-based companies support it as a way to boost demand. However, foreign automakers worry about competition disadvantages. Some financial experts warn that even though this is a tax cut, it could push up car prices, especially for in-demand models. Others believe this could help stabilize the auto market. The auto industry has seen high inflation and rising borrowing costs in recent years. Congress is currently debating the details of this tax plan. These discussions include which cars will qualify and how long the deduction will last. The bill may pass with modifications. Because of this, car buyers should stay informed before making long-term financial commitments. So what does all this mean? In the short term, this proposal could boost car sales. It could help American manufacturers. It could also put more money back in consumers' pockets. But in the long term, questions remain about its impact on trade, pricing, and the economy. What do you think about this new tax proposal? Will it influence your next car purchase? Let us know in the comments below. Do not forget to like, share, and subscribe for more updates on policies that impact you. Thanks for watching. Stay tuned for more insights into how political decisions affect your daily life.